Hello everyone, welcome to the Ichimoku charts.com daily analysis for light sweet crude oil for Wednesday, October 24, 2012. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low, and with a lot of the other markets that we've seen, a black body candle, a smallish black body candle in relative terms, and very much smaller than the large black body of the previous day. And it does suggest that the sellers have lost some momentum. The sellers in this case have closed between the midpoint level and the low, and it suggests that they have closed with control, but a very, very weak amount of control. This is very similar to a spinning top type candle. It's where we have a largish shadow on the top and the bottom, and a smallish body within the middle of the range, and it does suggest indecision. And it's indecisive basically because we saw downside price rejection as evidenced by the top shadow, and then upside price rejection as evidenced by the bottom shadow, and that downside price rejection that we saw here coincided with the market testing outside the top of this highlighted yellow area in a large dynamic zone of support and resistance, and that could be significant. That top of that area may actually hold as resistance if this market does attempt to change trend. There is a possibility of a change of trend because of this small loss of momentum and the sellers not maintaining the amount of control that they had as the previous day's trading, so we do need to watch that. But if the trend does continue down, then we do have strong support down around the 83.65 level, the bottom of this zone, and then no major support until the market trades down to 81, so that's quite important. Now, in terms of the Fibonacci extension, we're examining the relationship of the current first time frame downtrend to the previous time the market was trending down, and here we're seeing the market with a bearish close. The previous day is trading below the 161.8% level. Today the market has attempted to rally through the 161.8% level. It's been rejected from there, so there is still a possibility that the market could test to lower levels down to the 261.8% at 83.36 that coincides with the bottom of that zone roughly of the highlighted area previously discussed. In terms of the Fibonacci retracement of the prior uptrend, and we're in an expansive mode of that, testing in a very strongly bearish way through the 100% through the 161.8%, and now we are testing potentially to a target of the 261.8% at 83.80, coincides once again with that bottom of that zone. It will be very, very strong support if the market does trade down to there. In terms of Ichimoku, we have a bearish market in all three time frames here. The market broke out down below the cloud to give us a bearish market in the long-term time frame, and we have seen the market continue trending down in a very decisive manner. Very strong first time frame downtrend with some large black body candles in there, and also the market's trading down below the Kijun-sen and the Tenkan-sen, the pink line and the green line, giving us a bearish market in the medium and fast term time frames as well. This market is looking a little bit overextended. We are trading a fair distance away from the top of the cloud here and from both of these indicators, so there is potential for the market to trade back up again. Potentially strong resistance, however, as I've mentioned, around this 87 level, the top of this zone of support, and it coincides with coincides with the previous area of support here, and that may turn into resistance for this market as we've seen for today's trading. If the market does rally above there, however, we do have some decent resistance just above there at 87.72, and then up to around the 89 level as well, which was another swing high here. And also having the Kijun-sen and the Tenkan-sen trading around that 89 level does strengthen the potential resistance that the market will find up around there. But overall a bearish market in all three time frames, but we are now trading within an important zone. We would expect the market to find some support either at this level or just down below around the 83-85 area. We have seen the sellers lose some strength. There is potential for a change of trend to the upside, but the resistance up around 87 is quite crucial to that happening.